Welcome back. You tune into Buy Now Sell Now, where we are getting all your stock-related queries answered, and you can keep sending in your questions on the number that is flashing on top of your screen, and we will get all your questions answered. Send in your buy price and average holding period for the stock, and we will get our experts to answer all the questions. So without further ado, let's get started with all the questions that you have sent in. First question I see is coming in from Yash from Hyderabad. He wants to know about TCS. He's bought 400 shares of TCS at a buying price of 3,700 rupees, and he wants to be invested in it for a longer period of time. Kunal, he wants to know if he can add in more at the current juncture, at current market price. Can he add in more of TCS?
See, I think it's a good strategy. I would suggest just wait out for maybe another week or so, because you know what's happening is that with this consolidation for TCS in the last 2 weeks or so, the indicators have come back into sub-neutral territory for TCS. The stock is just about bouncing back from its 50-day moving average. You know, the near-term resistance for TCS is around the 3600, 3620 mark for the stock on the spot levels. So you may miss out on 3-4 percentage points if you're looking to buy this at the verge of a momentum breakout for TCS. But that I would believe could be a much more better timing, because you know the stock may take say another couple of weeks to consolidate and drift down into a lower trend. So it's always better to buy the stock at the point when the stock is ready for a breakout. That would happen once the stock crosses back about the 3620 mark. So I would suggest a wait, hold on to your existing holdings for TCS, but a buy or an add further about 3620 levels.
Okay, so that's the view on IT major TCS, but let's also talk about big boy Reliance Industries. We were just talking about this a couple of minutes ago with Kunal, and we have Anil Malhotra who has written to us from Delhi. He's a senior citizen. He's holding about 2,000 shares of Reliance Industries at the price of 828 rupees per share. The stock currently at 1420 odd levels. He is asking whether he should continue holding this position and with a 3-month time horizon. Kunal, what will your view be?
Yeah, I'll be very bullish on Reliance Industries. In fact, on the chart busters also I had mentioned Reliance Industries as a chart which potentially has a bright future in the near to medium term, because the stock has crossed back above the 200-day moving average. There is a golden crossover where you're seeing the 50 DMA crossing back above the 200-day moving average. In the historical context, whenever that has happened for Reliance Industries, it's generally indicative that the stock has come back into an uptrending mode, something which could last for 2-3 months, and even at a stretch we've seen stocks reacting much more positively for months as well as for quarters to come by. So from a near-term play, I would suggest a hold on Reliance Industries. Maybe over the next couple of weeks, you might see the stock stagnating at this 1400, 1430, 40 range where the stock has been trading, but that should not deter a short to medium-term investor.
All right, so that's the view coming in for as far as Reliance is concerned. But Kunal, there's another query for TCS. We have already spoken about TCS, but the question that Revant is asking is a short-term trader. He wants to know that he's purchased 520 shares of TCS at an average price of 3,498, and he's purchased it in this week. He wants to know the stop loss and the target for it for a very short-term period, and also 740 shares of Sun Pharma at an average price of 1,740. He wants to know the target for Sun Pharma as well.
See, for TCS, I would suggest that keep the 50 DMA as a stop loss for the trade. That I believe, if I'm not wrong, is at 34.66 or 67 on the spot level. So maybe that could be a good stop loss if you're looking at this as a very short-term play, because if in case the stock falls below the 50-day moving average or closes below the 50 DMA, that would be a point where you might see the stock maybe drift down a bit more further. So that could be a stop loss from a short term. For Sun Pharma, on the other hand, I believe that the stock seems to have touched back into a major bottom formation. Over the last 2-3 months, we've seen 1600 to 1650 thereabouts. 3 attempts for the stock to try and come back into this support territory, and from those levels, we've seen the stock bounce back every time. So which means that this time around also, the stock should exhibit a very similar behavior. So I would suggest a hold on Sun Pharma, maybe just about try and extend your time frame by another couple of weeks. But on the upside, I think 1750 to 1800 could be a decent target range for Sun Pharma.
Okay, so 1750 to 1800, those are the kind of levels that we could see for Sun Pharma. But we have Ekambaria who has written to us from Hyderabad. He says he wants to make fresh positions, fresh entry into L&T. Kunal, what will your view be on this stock at the current market price with a 1-year time horizon?
See, I think there is a very interesting change which has happened for L&T. So, of course, L&T is one of the stronger names from the cap goods space. There are two important aspects. One is the correlation of L&T with respect to Nifty, which I think is around 74 to 78%, depending on the phases which you look out for. But then consistently, the stock has exhibited a very high correlation with respect to Nifty, which means that if the index moves up higher, there is a strong case that L&T manages to chug along. There was a phase of a major underperformance for L&T since the last, I think, 1.5 odd month back, where the stock was an underperformer, even though the Nifty started to make a bottom for itself. But then now I think L&T is trying to play a catch up for the trade. Now the other best part for L&T on the short term charts on a relative strength basis is that in the last 1-2 months of this recovery for L&T from 3000 levels to now 3400 plus, the stock has been a leader from the cap goods space. So you've seen L&T moving up first, breaking past about the 200 moving average. The other peers, Siemens, ABB, Cummins, etc., they are still some distance away from breaking above their long term moving averages. So which means that if the sector has to perform going forward, L&T would be one of the top picks in that pack. So in both aspects, I believe L&T should be a stock which you should hold on to from a medium to long term play.
All right, so holding on to L&T for long-term and a short-term perspective. But coming to the next query, Kunal, this one's coming from Pankaj from Haryana. He's bought Dr. Lal PathLabs for 150 shares for 3,150 rupees. He wants to know the short-term view. Should he be holding it or selling it? Because he's already, Kunal, sitting at a loss right now. Should he hold it or should he sell it at current juncture and cut his loss?
See, it's not an exciting chart, frankly, because I think since last or start of the month of May, as I can spot, most of the indicators had come back into a consolidative phase. We generally see those indicators where we expect that the stock for at least 2-3 weeks remains sideways. Even right now, end of the May series and the start of the June series, we are looking at a point where the indicators are still into that neutral kind of a territory. So that's where I would believe that maybe the stock could consolidate a bit more further. I would suggest that if you're looking to rebuy the stock, then you can probably rebuy the stock once the momentum kicks back again. That could happen once the stock crosses levels of 2950 on the spot levels.
Okay, so that's as far as Dr. Lal PathLabs is concerned, and that's the view coming in. But we have Mark, who has written to us from Chennai. He's asking if it is the right time to buy Varun Beverages and what will the target be for the short term for about 3 months. So Varun Beverages, that's a stock. And Kunal, we get a lot of queries on this particular stock every single day. But you tell us, what is your view on this company?
See, it's still on the bearish side, frankly, because, look at it this way, that in the last 2 months, we've seen so many mid caps and large caps performing exceptionally well. But this has been one stock which has been an underperformer. Just as a case in point, in the last 1 month, from April mid, the stock made a high of around 550, 560 thereabouts, and it's now trading at 480 levels, which means it's already fallen by more than 15%. The concern for the stock is not that the stock has fallen, but the way the stock has drifted lower, made a pattern of lower highs and lower lows. That's the concern, because you're seeing a lack of volumes, you're seeing a drift down to the stock price, which means there is a lack of participation or interest into the stock. Now, when you are looking to invest into names like Varun Beverages, where there is a lack of interest and participation, you generally have to wait out for a longer period of time. So that gestation period is much longer for these kind of names. To try and cut down the gestation, it's always better that you wait out for the stock to come back into momentum and then buy the stock, even if you are missing out on say 3, 4, 5 percentage points initially. So I would suggest that wait out for that zone for Varun Beverages. That could happen once the stock crosses levels of 500.
All right, so that's a view coming in on Varun Beverages, but hold in there, we have another guest joining us now, Jatin Geria, who's the technical research analyst at Mirae Asset, Sher Khan, who's joining us now. Hi, good morning, Jatin. Thank you so much for taking the time out and joining us on the show. So let me come to you, Jatin, then with the next question then, that's coming in from Ravi Chandra, who's writing in from Hyderabad. He says he's bought 200 shares of BHEL at a buying price of 220 rupees for the short term. Now he says it's at 270. Today actually the price has today it's at 262 is where BHEL is at. He wants to know if he should keep the stock or should he book profits at this juncture. Jatin, BHEL has done well in the last 1 month. It has run up 15%. At this current juncture, should he really book out his profit because he's made a little profit there, or should he hold it for a longer period to perhaps cash in more?
Morning, everyone. So as far as this investment in BHEL is concerned, the stock is still in an uptrend. So the ideal strategy to trade or to hold on to this stock is to keep a trailing stop loss. In the current situation, 257 is the level around which he should place a trailing stop loss and thereafter continue to hold his positions. Ideally, partial profit booking is advised and partial holding is advised with a trailing stop loss at 257.
That's the view coming in on BHEL, but we also have Venu, who is a senior citizen from Chennai. He's asking for a technical view on Escorts and Deepak Nitrite. Jatin, what will your view be on both these counters?
See, in the case of Escorts, we believe that the stock has witnessed a correction in the last couple of trading sessions. However, the downside is limited to 32.40 on the downside, wherein the 20-week average support is placed. So I believe that the weakness has already come in. So continue to hold with a trailing stop loss at 32.40 on the downside in the case of Escorts. On the resistance front, we are expecting 3500, 3520 to act as a resistance. So as of now, she could continue to hold in the stock Escorts with a trailing stop loss at 32.40 for target of 3500 on the upside. In the case of Deepak Nitrite, Deepak Nitrite in yesterday's trading session did witness a sharp up move. However, today that has not witnessed a follow-through buying interest on the upside. Having said that, the crucial support for Deepak Nitrite is placed at around 2000 rupees and the resistance is at 2120. So I am expecting a range-bound price action in the case of Deepak Nitrite between 2000 and 2120 on the upside. Overall, a range-bound price action is expected, and she should continue to hold with a stop loss placed at 2000.
All right, moving on, coming to you, Kunal. Then Soumya was writing in from Chennai. She's bought Vodafone Idea at 12 rupees and GNFC at 700. She wants to know if she should continue to hold these stocks, average in or exit at the current levels. Now, what is the target that is expected for a shorter period of time on both Vodafone Idea and GNFC?
See, I think I don't see a reason why you have bought Vodafone Idea, and especially at a point when the stock was at 12 rupees. I would believe even at 8 rupees or 9 rupees, the stock may not be a great buy because you have better alternatives available and you have Bharti Airtel, which has been one of the more consistent performer. So look at it this way: if you're expecting the telecom stocks to do well, then which are the two leaders which could do reasonably well? One of course is Bharti Airtel, and the other is Reliance Industries in that sense. So I would believe that it's better that you shift your capital from Reliance Industries to from Vodafone Idea to either Bharti Airtel, which would be the top preference. In the pack, as well as maybe some partial allocation could be shifted towards Reliance Industries. Coming to GNFC, there is slight evidence on the chart that the volumes are making a comeback for GNFC. The stock in just the last 2 weeks has recovered from 450 to 550 thereabouts. But it's a very high beta name, so I'm not sure whether you're looking at building onto more high beta stocks because high beta stocks, they may tend to do very well when the market sentiment is positive, but on days like today or maybe days like in the last couple of days when the market sentiment was a bit more pessimistic kind, you would probably expect that these stocks may drift down to 3, 4, 5 percentage points on a single day. So that could be the only concern with a stock like GNFC, but for Vodafone Idea, would suggest a switch.
Okay, so switch, that's the view coming in on Vodafone Idea. Don't hold on to these positions. But we have Bharatwaj, who has written to us from Coimbatore. He's holding about 780 shares of Exide Industries at an average price of 411. Jatin, what will your view be on this stock, and does it make sense to buy more at the current market price? That's the question that Bharatwaj is asking.
As of now, it's witnessing some minor degree pullback. Overall, the stock has witnessed a decent amount of correction, so technically oversold, and thereafter we are witnessing, a pullback. So I believe that this pullback has more steam on the upside. 410 to 420 is the previous support level or the resistance that we are looking at in the case of Exide. So she should continue to hold onto Exide Industries with a trailing stop loss at 370. So 370 is the support level. So that should act as a stop loss level for her and continue to hold for a target of 410 to 420. As far as if she wants to add more, yes, she can add more at current levels.
All right, that's the view coming in on Exide Industries. But Kunal, coming to you, this is Krish who's writing in. He has bought JK Cement, 15 shares at a buying price of 4,955. He wants to know your view for the next 6 months. Should he be holding it, or is it a sell on JK Cement?
I think it's an exceptional chart. In fact, out of the few very rare, cement stocks which have actually done reasonably well, JK Cement is one of them, because I think there are just 3 odd names which come at the top of the mind. You've Ultratech Cement, you've Shree Cement, which have done reasonably well. And JK Cement is the third stock which has done reasonably well. Now, the good part about the stock in the last couple of weeks is volumes are making a comeback. So initially the stock was moving up higher on the back of lower volumes. So there was a lot of circumspect that maybe the trends would last or not. But then in the last a couple of weeks, you've seen volumes moving up higher for JK Cement. So that should add to the fact that the stock would now come back into a trending upside. So since you bought at lower levels, you're sitting with a good profits, I would suggest maybe trail your stop losses and then hold your positions.
Okay, so that's the view coming in on JK Cement. The stock holding up 5,500 is where it is currently trading. But Poonam Anand, who has written to us from Punjab, she has about 250 shares of TVS Supply Chain bought at the price of 138 rupees per share, and Equitas Small Finance Bank at 86 rupees per share. So those are the two stocks she is holding. Jatin, what will your view be on both these counters, TVS Supply Chain and Equitas Small Finance Bank?
Yeah, see, in the case of TVS supply chain, the stock is in a medium-term downtrend. I believe that this current pullback that we are seeing should be considered as a exit opportunity, because it has now hit the resistance, the 20-week average. So I believe there could be some amount of resistance or supply pressure coming in at current levels. So exit would be the suggestion in the case of TVS supply chain. And for Equitas, I believe that even Equitas is in a downtrend. There was a bump up during the month of March and April. However, post that, it has not been witnessing any follow through buying interest on the upside. So I believe that there is no point in getting into such stocks. So I would suggest even to exit Equitas Bank if she is holding. Fresh positions or additions are not advised.
All right, moving on then, coming to you, Kunal. This is Anupama who's writing from Abu Dhabi. She's bought 200 shares of DCB Bank at 139 rupees per share. Now, what can be expected in terms of target in the short term? She says she doesn't even mind holding in for a longer period of time if there is an up move in store for DCB Bank.
No, in fact, I was actually looking at the charts quite extensively over the last fortnight or so for DCB Bank. And I think, if I'm not wrong, 99 or 100 was the support or the low for the stock in this last 2-3 months of the price correction. And from there, the stock has jumped back quite sharply. Currently, it's closer to that 145, 150 range. I think it's an exceptional move for DCB Bank. And I remember, I think in 2023-24, there was a point when the stock was one of the better performing mid-cap banking names. So which means that the mojo for the bank is coming back. This could be a very good positive signal for DCB Bank, because even the volumes are making a comeback, the relative strength is making a comeback, the stock has been a better performer as compared to peers, more consistent. All of that should augur very well. The only part which I would believe for DCB Bank where you have to keep an eye on would be the news flow for the stock price, because I remember, I think in 2023-24 there was a spate of negative news flow for the stock which impacted the stock price trend for 3-4 quarters on a trot. So that's the only concern for a stock like DCB Bank. Now, assuming if that's not on the negative side, I think it's a fantastic chart to look out for. My sense is that looking at the status quo of the chart patterns, the stock should be good for at least 180 to 200 over the next 1.5 years.
Okay, so technical view on DCB Bank is very positive. We could see levels of 200, but with that we need to slip into a short break. But we'll answer many more queries on the other side of the break. Stay tuned, don't go anywhere.
Welcome back. You tune in to Buy Now Sell Now, where we are getting all your stock questions answered by our experts. The number is flashing on top of your screens. You can start writing into us, and we will get all your questions answered by our experts. So let's resume then. And coming to you, Kunal, a big fan of yours is writing here. This is Leena, who's a senior citizen from Kolkata. She says she's glad you're back on the show. She's a big fan. She says she's bought 750 shares of AB Capital at a bank price of 200 rupees. She wants a technical view on AB Capital.
Thank you so much for that, and also thank you for highlighting AB Capital, because it's been one of my favorites.
One of your favorite stocks.
Absolutely, yes, and I've been very bullish on the stock because of the way the stock, longer term charts have been looking for AB Capital. I remember, I think, flagging of the stock closer to 185, 86 levels for AB Capital. I think even at current levels, I would probably believe the stock looks very good for a potential breakout towards the lifetime high levels. I think, if I'm not wrong, 246 thereabout is the life high for AB Capital. In this move, what we've seen for AB Capital, the stock has done phenomenally well. It's surpassed the 200-day moving average. The volumes have been on the higher side for the stock, especially on the week or the month, where the stock has gained good price action. Post that, we've seen consolidation also for the stock, which means that after a zone of a fierce uptrend, the stock is seeing a consolidation that neutralizes the indicator for the stock in the near term. I believe that the prospects for the stock should be much on the higher side. The only question over here is that how much you can wait for the stock price, because there seems to be a point where, or a behavior of the stock, that it goes into a prolonged phase of a pause or consolidation before there is a sudden knee-jerk price action on the upside, and you see the stock breaking out. So that's the only concern for a stock like AB Capital. But I'm assuming you're a long-term investor, I would suggest a hold.
Okay, so hold rating coming in on Aditya Birla Capital. It has been one of Kunal's favorites. But we have Indu, who has written to us. She has a technical query, and she's asking for a short-term view on NTPC. She says she's holding at the current market price and whether she should continue holding or exit out of this position. So Kunal, NTPC, what will your view be?
See, I would suggest an exit on NTPC. Now, I understand that NTPC is one of the formidable names, large cap stock, etc. But the concern for NTPC is the resilience of the stock to surpass the longer term averages, and it's been a major resistance point for NTPC. In fact, in the last 1 week or so, the stock has been a relative underperformer, and it's now on the verge of a break below its major support. I think 332 thereabouts is the major support for NTPC, and I think it's 1% or 1.5% away from its critical support point. So if in case the stock breaks below those points, you might probably expect the stock to drift much more lower. So in that anticipation, I would suggest an exit.
All right, moving on then, an exit coming in on NTPC. But coming to you then, Jatin, this is Kabir Bedi is writing in from Patiala, Punjab. He says he's purchased 700 units of DLF at a bank price of 655 rupees. This was 3 weeks ago, and he wants to know if this is the right level to exit or hold on for another 3 months. Jatin, DLF, it has already moved up 18% in the last 1 month. Do you see this positive momentum to continue, or at this juncture, he should probably book profits?
Partial profit booking is advised. However, the stock is still in an uptrend and is showing no signs of a trend reversal as of now. So, in such a situation, to take advantage of the up move, a trailing stop loss is advisable. The trailing stop loss level should be placed at 780 odd levels. So, with a trailing stop loss at 780, you should continue to ride the up move. On the upside, the immediate target that I'm seeing is around 830 to 835. So more around 3 to 4 odd percent up move is likely in the case of DLF. So continue to hold, and even some partial profit booking is advised.
Okay, so profit booking is advised as far as DLF is concerned, but we have Sharmishta Malik. She has written to us from Kolkata. She purchased 500 shares of Hindustan Zinc at 450 rupees per share. And Jatin, she's asking what price can she expect in the next 3 months. So Hindustan Zinc is the stock that we are talking about. What will your view be?
See, Hindustan Zinc has been in a prolonged downtrend. Now, since last 3 to 4 months, it has been forming a base for itself. Yesterday, it did give a breakout. However, today, that momentum has fizzled out. So, I believe that post this decline from 850 to around 400 odd levels, the stock is poised for an up move. towards 516 to 520 on the upside. So she should continue to hold. I believe the stock is likely to continue its up move. Having said that, 440, 435 should also be not be breached on the downside, which is the 20 to 40-day moving average. So hold on to his investment in Hindustan Zinc with a trailing stop loss or stop loss placed at 435 on levels.
All right, so that's Hindustan Zinc on the charts. But let me come to you, Kunal. This is Deepak who's writing from Calicut. He says he's planning for a one-year investment, preferably in an energy or an oil and gas sector. Any good stock recommendation at this current price, and what should be the target?
See, I'm not sure specifically if you're looking at all marketing companies on the refining side or that kind of a space. I think for example, Reliance is something which you discussed. That's a stock from the oil and gas space as such, looks attractive at current levels of 1400, 1440 range. We mentioned that the stock could probably come back into a breakout mode pretty soon after a zone of consolidation because of the way the 200-day moving average and the golden crossover is panned out for the stock price. I'm not sure whether the most of the other names, like for example ONGC, NTPC, etc., or whether you see the traditional oil marketing companies, IOC, BPCL, HPCL. I think most of the charts in this kind of a category are still remaining a lot more sideways. So I think except for Reliance Industries, as of now, not too much of an attractive chart across the board.
Okay, so that's the view on Reliance Industries and several other oil and gas stocks. But SK Saran has written to us from Bengaluru. He's asking for a fair price to purchase for a fresh entry into Adani Ports. Jatin, what will your view be on Adani Ports if he wants to make a fresh entry?
See, in the case of Adani Ports, I think there is a divergence on the daily charts at current levels. So I think the up move is a little bit overstretched, and I'm expecting a correction in the case of Adani Ports. A good level to enter would be around 1320, where we have the 40-day average, or even above that around 1380, that is the 20-day average. So 1380 to 1320. These are the crucial levels around which he can plan to enter. But at current levels, there is a lot of divergence or a negative divergence that is developing on the daily chart. So at current levels, definitely an hold.
All right, that's the view coming in on Adani Ports. But coming to you, Kunal, this is Subramaniam who's writing from Secunderabad. He wants to know the correct buying price for Bajaj Auto and BSE share. He wants to know if today is a good current price to get into BSE and Bajaj Auto.
Well, after an 8.5% move, the stock at all-time high levels, and then over the last, I think, 3-6 months, the stock has already gained 50%. So difficult to give a call, frankly, on BSE. Maybe I think couple of days back when I was flagging off, that BSE is still not overbought. That was the point when the stock was at 2400 levels, 2420 thereabouts. That could have been a much more better, buy zone for BSE. But I would just suggest a wait for the stock at current levels. For Bajaj Auto, on the other hand, I think we should try and utilize this dip to try and go for a buy on dip strategy for Bajaj Auto. It seems like that the stock could come back into its 50 DMA retest. That level is closer to 8,100 200 range for Bajaj Auto. Currently the stock is at 8,600 mark. So maybe at every 100-150 point dip is where you can look to add or accumulate Bajaj Auto.
Okay, so that's the view on Bajaj Auto, but we have Vijay Kumar Pratibandila who has written to us and he's asking for a technical view on LIC and Bharat Electronics. Jatin, what will your view be on both these stocks?
I'm LIC of India or LIC Housing Finance?
Yes, LIC.
Sorry?
LIC, Life Insurance Corporation of India.
Yeah, see, in the case of LIC, I am expecting a move towards 1000 odd levels. I think in the penultimate trading session, there was a strong up move, and post that it has entered into a consolidation phase. So this consolidation phase can continue, and within this phase, we can expect a dip towards 920 odd levels. So, however, the price action is pretty strong, and I am expecting the previous swing high, which is placed around 1000 that it touched in the month of December last year, that to be retested over the next few weeks. So utilize any dips towards 920, 910 should be utilized as a buying opportunity. On the upside, we are expecting levels of 1000 in the case of LIC.
All right, so that's the view coming in on LIC. But coming to you, Kunal, this is Sagar who's writing in. He wants your view on Jubilant Food work. He's shorted 20 lots from 705 levels. He's looking for a target of below 600 rupees. He wants to know if it's possible or he's just getting greedy, Kunal.
No, I think it could be possible for Jubilant Food. It's been an underperformer. I've tracked the stock in the last couple of weeks, and the underperformance of stock has shown, or rather the resistance closer to that 710, 713 mark on the spot levels for Jubilant Food. So it's a good trade. You can continue to hold on, but again, like what we do for every trade, that when you are in the money, when you're in profits, it's better to try and trade your stop losses towards a certain comfortable point where the stock doesn't surpass those levels and then comes back to your starting point or your cost price. So I think in that sense you can continue to hold on to the trade with a trailing stop loss.
Okay, so continue holding on to the trade. That's the view coming in on this stock. But we have Kiran who has written to us from Pune. He also says he's a big fan of Kunal. He's holding about 1000 shares of Jindal Saw at 350 rupees per share and Polycab at 5960. He's asking whether Polycab can touch 7000 mark. So Polycab and Jindal Saw. What will your view be, Kunal?
So thank you so much for that. For Polycab, I would believe that you can hold on to the stock. Now I'm not sure whether the stock will come back to that 7,000 mark because I remember I think there was a lot of negative news flow for Polycab and then such other stocks a couple of months back with the entry of a major player over there. So that was one of the major reasons why the stock was into a major overhang. But when I look at the historical charts, there is a tendency of the stock to try and make a V-shaped recovery after a major correction. I think something similar happened in 2023 also for Polycab when the stock was at 2500 or 3000 plus levels. So I think in that anticipation, maybe the stock could do reasonably well, but then you'll have to watch the extent of news flow, which could be flowing on to the stock price as well as the sector. Jindal Saw on the other hand, I would suggest an avoid as of now because the stock still seems to be a downtrend, and it still seems like the weekly and the monthly charts for the stock are indicative of a lower highs and lower low pattern for Jindal Saw. So that's an avoid from my side.
All right, so avoid coming in on Jindal Saw, but we'll move on from there. Let's move on to the next question. This is Chitra who's writing in from Bangalore. Needs Kunal's suggestion on Birlasoft and Chambal fertilizers.
So, Chambal Fertilizers, I've tracked the stock and, apparently this last 10% correction in the last, I think, 1 month or so, I think I would believe that could be a good buying opportunity because the long-term charts for Chambal Fertilizers are very attractive. And, I was doing this relative strength, scale analysis for Chambal Fertilizers with respect to RCF and Coromandel, etc. And the stock seems to have been one of the better performing names for a good part of 2024 and 25 start also. So maybe this 10%, 15% correction from the highs for Chambal Fertilizers, I think that should be taken as a good gradual buying or accumulative opportunity for the stock price. Birlasoft on the other hand, I'm not sure that it could be a good buy. I would suggest that there are better alternatives which are available in the mid-cap IT names because there was a point for Birlasoft when the stock was at 350 levels that the stock was at a huge divergence of almost 25% from its long-term moving averages. Those divergences have narrowed down for Birlasoft. So maybe the stock would now just about get into a drift or a mild consolidative range. So nothing looking attractive in terms of the near-term prospects for Birlasoft. I would suggest an avoid, but Coforge is something which you can look out as an alternative from the mid-cap IT names.
Okay, so that's a buy call coming in on Coforge, but avoid Birlasoft. But we have Sunny who has written to us from Kolkata. He's asking for a view on Bank of India. Jatin, what will your view be? He's asking for a view on the stock for this particular series.
Yeah, see, in the case of Bank of India, in the immediate short term, it had broken out from a symmetrical triangle pattern on the upside, but however, post that, we are not seeing any follow-through buying interest. However, the stock is still sustaining above its short-term moving averages. So I believe that this dip that we are seeing since last couple of trading sessions should be bought into. On the upside, I am expecting 124 to 127 levels in the case of Bank of India. And for this, if he already has, then he should keep a stop loss of 114 rupees for this long trade.
Right, so that's the view on Bank of India. But coming to you, Kunal, this is Partha writing from Chennai. He's bought 3,500 HCC shares at an average price of 42 rupees. What is the long-term slash short-term view also for HCC? He wants to know both the short-term and the long-term view.
See, nothing majorly attractive on the charts except for the fact that the stock at 50 plus levels in 2024 was at the verge of a major multi-year breakout. Rather, it was almost like a 10-year, 12-year breakout, potential breakout for HCC. But the stock has fizzled down, post that, and from 50 odd levels, the stock I think came crashing down towards 20-25 kind of a zone. So it's a sharp 50% correction. Now, these are the kind of stocks which generally tend to do very well when the market sentiment is a lot more buoyant. When you see a bull market kind of a scenario, what we saw in 2020 to 24 mid part. So I'm not sure whether we are looking at a very similar kind of a prospect for the markets in the near term. Yes, we are into a recovery phase, but I would believe that gradually there would be a time where these stocks may start to outperform. If you are holding on to the stock, you can continue to hold on. Maybe the phase which I just mentioned, once the phase starts to kick back again for the overall market, that's where you might probably expect that stocks like HCC would come back to 40 to 50 plus kind of a zone.
Okay, so that's the view coming in on HCC, but we have Kusuma who has written to us from Pune, and he's asking for any one strong defense stock for 15% upside for the next 1 month. I'm sure this is a difficult question, but Jatin, a defense stock that you like?
Yeah, see, the one stock that still has a potential to outperform even from current levels is HAL. The reason I am saying is that it is still far away from its previous all-time high, and most of the defense counters are at an all-time high. So the HAL has to play catch-up in that sense. So I believe that HAL has a good setup as well. So I believe that from a 15 to 20 kind of a percent up move, HAL looks good from current levels. In terms of stop loss, for 4,800 should be kept as a stop loss, and on the upside, I am expecting all-time highs of 56.70 in the case of HAL. So for a 15% up move, HAL is a preferred pick.
All right, moving on from HAL, coming to you, Kunal. This is Gayatri is writing from Chennai, and she wants to know if she's holding Sobha shares at an average buying price of 540 rupees. She sees that recently, after a long time of a downtrend, finally Sobha has started showing some significant growth pattern. Is it a good time to add more share for a longer period of time as far as Sobha is concerned, Kunal?
Yeah, in fact, again, I think just about in the morning I was, having a chat with Nikunj that, many of the real estate stocks are making a comeback, and gradually many of these stocks are showing signs of a pickup in terms of price action. So it started off with, I think, Macrotech Developers, which was one of the better performers, then moved on to DLF, and now I think you've seen, Oberoi Realty, Sobha, Prestige. These stocks have made a decent comeback in the last few days. So, which means that we are looking at a synchronized move for the real estate pack, and this could actually bode very well for the entire sector. So I think there could be a decent prospect in the near term for the stock. I would suggest a buy or even an add at current levels.
Okay, so buy or add at current levels. That's the view coming in on Prestige Estates. But Kunal and Jatin, thank you so much for taking your time out and answering all our queries. Thanks so much for joining us today. But
all right, with that, it's a wrap on this edition of Buy Now Sell Now. Shesh and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Market action continues on ET Now.
If you like this video, then like, share and subscribe to ET Now.